Right. So we are looking specifically at Sandisk today, ticker symbol SNDK. And the internal company sources we have here, they show the company just posted a third quarter fiscal 2026 revenue of $5.95 billion. A massive upward operational trajectory juxtaposed with this sudden downward price action. Our brains just desperately want to force a direct cause and effect relationship there. Exactly. We want to say, well, the market is fundamentally broken, or that the earnings report was somehow a trap, or that somebody knows something nefarious that we don't.
And that is exactly why we are not going to jump to any of those conclusions today. With you, we're going to use a mental model for this deep dive that we call the business price proof framework.
Right.
Because if you want to actually understand what is happening here without getting swept away by the financial media noise or making assumptions that'll just get you into trouble, you have to separate these elements completely.
So it operates in three distinct phases. First, we look at the business.
This means, just for a moment, we're going to strip away the stock ticker entirely. We don't care about the stock market yet.
We're ignoring the market completely for step one.
Exactly. We are looking strictly at the internal quarterly numbers. What do the verified operations of Sandisk tell us about the actual company? Then second, we move to the price.
Which is the market reaction.
Right. What did the broader market actually do on that specific day, July 15th? And finally, the third and honestly most critical step, proof.
The reality check.
Yeah. What can we factually, indisputably verify from these sources? And, just as importantly, what are the strict, immovable limits of our evidence?
It is so incredibly easy to blur the lines between those three things. I mean, I see this all the time.
Oh, constantly.
You take a stellar business metric, you mash it up with a red day in the broader market, and suddenly you're convincing yourself of a storyline that has zero basis in reality.
We are engaging in a rigorous analytical breakdown. You can think of it as an evidence test. We're going to use only verified data points from the provided sources to understand the anatomy of this disconnect.
No guessing.
No guessing. Our goal is to dissect corporate performance versus market behavior. We are here to look at the mechanics, not to offer financial advice or predict where the stock is going tomorrow.
Let's pull the first thread here. Let's start with phase one of the framework. The business. Q3 fiscal 2026 revenue hit $5.95 billion. That is up 251% year over year. The report states that their Q3 GAAP gross margin reached 78.4%. And that represents a jump of 55.9 percentage points from the previous year. It breaks down the revenue, and it shows that in Q3, Sandisk's data center revenue specifically was $1.467 billion. That is up an incredible, almost unbelievable 645% year over year.
A 645% increase in one specific sector. Zero growth in overall physical volume shipped. Flat year over year. Further down in the sources, the data shows that the average price per gigabyte across the entire company skyrocketed by 248% year over year.
But data center volume specifically is up 160%.
Only tells us what Sandisk did. Now, we have to look at how the broader market digested this environment on our specific date of interest.
Right. We're moving from the somewhat sterile, controlled environment of corporate accounting into the chaotic, emotional, highly reactive arena of the open market on July 15th.
So our volume is simply the price of the stock multiplied by the total volume of shares traded throughout the day. It is a measure of absolute activity, of total kinetic energy. It is not a measure of direct. The stock market is an exchange mechanism. For every single share of Sandisk that was sold on July 15th, there had to be a buyer on the exact opposite side of that trade paying the exact same price.
Right. The shares don't just disappear.
You cannot sell a share into the void. If a share is sold, someone bought it. Therefore, the $30.45 billion does not represent confirmed net flows out of the company. It represents the total financial energy exchange between willing buyers and willing sellers. Let's look at that July 15th board again. Sandisk, as we know, dropped 8.12%.
Yeah.
But right next to it, the sources show that Micron Technology ticker MU dropped 8.02%.
Wow. They're almost perfectly mirrored, 8.12% versus 8.02%.
And it gets broader. The data shows AMD dropped 3.46%, Intel ticker INTC dropped 4.43%. However, NVIDIA ticker NVDA was the sole exception in this provided basket, remaining slightly positive, up 0.33%.
We have absolutely no verified proof of what tripped the wire on that exact day.
That is the epistemology of markets, recognizing what we actually know versus what we are merely assuming. This is educational market commentary, not financial advice.